So we'll start off with a look at each one of these pairs, one by one, and then we'll move on to the power stats and the volatility study, as well as discussing the spread, the cost per trade. So we'll take each pair one by one. So there is a way that I think we can better break down, deconstructify, as I like to say. I love making words up. I like to deconstructify a market, and that's really what we're doing here today. We're going to deconstruct each one of these pairs. But there are particular aspects of each pair that we need to pay attention to. So if I'm going to go about this whole process of deconstruction, the first thing I want to do is remember that the most psychologically relevant time frame for any pair, hear me out, that doesn't mean the most tradable, but this most psychologically relevant time frame for any pair is the daily. So I want to start off with the daily. We're going to take a look at the dollar-yen first. So I'm going to start off with the daily. Now, the daily time frame, when I am looking at it, and this is the first step, typically when I get to the charts, that I am going to take when it comes to understanding what this pair is doing. Now, I don't want to omit the economic calendar. I don't want to omit fundamentals. And that's probably going to be best left for a separate session of fundamentals specifically, because I have a very particular way I parse through headlines, understanding headline risk, and also the economic calendar. What we're talking about here, if for my purposes here, I consider myself a chart hacker, and a chart hacker understands there could be one or more of any three elements that are affecting the price movement on any pair, in any market, quite frankly. We have the actual price action, the way in which, if you want to call it the tape, you want to call it the psychology of order flow, however you want to call it, there is a way in which price tends to move. There's a way in which price moves around very popular indicators, whether those be 20, 50, 200 period simple moving averages, whether they be chart patterns, Fibonacci, pivots. There's a way that price action moves according to technical indicators. Now, remember, technical indicators should not be confused for a student or the process of analyzing price action. Price action doesn't need an indicator to be understood. An indicator does need price action to be calculated. So those are two very different aspects of the three. The third is the fundamentals, and there I'll put in headlines and economic data releases. So what we're going to focus on is the first two here today. We'll talk a little bit about the underlying economics as we wrap up our session, just so you have some ideas as to what's affecting the yen in particular. But the first things first, again, the daily time frame. So I want to start with a look at the daily time frame in what I call the market memory, which is, sometimes I'll refer to it as the look back. So market memory or market look back. And I want to start off with 1 year in the view, which means that going from left to right, I want to at least see December something on the left side of the chart. So today's December 6th. Ideally, we'd be going from December 6th, 2011 to December 6th, 2012. You can see we're about the 14th, 15th, and that's fine. What do I want to look at in this view? I want to look at the recent highs and lows, and I want to look at where we were a year ago to where we are right now. Just, again, these are just glances. You don't need to make notes about it or anything. Just take note of where we are in relation to a year ago. Take note of the trends that we've seen over the course of the last year, or maybe a lack of trend that we've seen over the course of the last year, whatever it may be. And then finally take a look at the current trend. So we make our way from the left side of the chart to the right edge of the chart. And here we'll notice that the current psychology is one of not only consistent green grab candles, but also of a 12 to 2 o'clock angle of the wave. Now, I'm only going to take this clock angle within the context of my market memory. So I want to look at that 1 year view, and then I'll take a reading on what this angle is of the wave. So that's the first thing, just to get to know a pair. So the current trend of the dollar yen is indeed up. So that tells me a couple things. That trend following plays, if at all possible, would be the best way to go. I want to follow the trend. If the bulls are the ones behind the driver's wheel, if they're the ones steering this pair, that's where my attention ideally ought to be, with the bulls, with the people with their hands on the driver's wheel, or if they're bears, I guess you could say paws. All right, so what I want to remember is if I go counter trend, and this is what's so important about what I call directional bias. For those of you that are frequent visitors to Daily Forex Trading Edge or catch my writing anywhere, you know I talk about this concept, directional bias, a lot. So what I'm talking about here is there a trend on the daily time frame? It's just really that simple. Is there a trend on the daily time frame? So I ask myself that. Ideally, I'd like there to be a trend on the daily. That'd be ideal, because that way you know if there is overall bullishness or overall bearishness. I think choppy daily time frames actually equate into some of the most difficult environments to trade. There's no organization of sentiment and momentum carrying into a trend, carrying the market, so I find that to be rather difficult. Once I've determined the directional bias, if there is one, sometimes we'll end up with no directional bias on the daily, in which case it's probably a fairly safe bet to say, go ahead and put that pair on the back burner, or really put it away for a while, because you're not going to have organization of psychology, and it's going to make for a much more difficult environment in which to find trades and, more importantly, get follow-through. A lot of people forget that trading is the process not only of getting your entry, but getting the follow-through back in the direction of whatever entry style, whatever your strategy ultimately was. So with an uptrend here, immediately I know any buy is trend following. I know that any short, may it present itself, is counter trend. Now, think of yourself for a moment, if you will, as a salmon. You're a salmon, you're swimming upstream, it's time to spawn. You're dodging bears who are trying to eat you. You've got to get around rocks, and obviously you're going against the flow of whatever river it is that you're trying to swim upstream. Stream, river, you're swimming up it, so definitely counter the flow. What do most salmon do once they get to wherever they're going to? Well, they spawn, and then they die. That is nature's lesson to us. Is it easier to follow the trend? Absolutely. Are you going to exhaust yourself, possibly going counter trend? That is most likely the end scenario. So take a lesson from our dear friends the salmon, of which sushi I love. That's one of my favorites. So if I am going to go counter trend, if I'm going to be that poor little salmon swimming upstream, and I literally imagine this because it keeps my mind on what is the reality of the situation. If I'm going to go against the dominant directional bias of the market, I want to do so in short bursts, which means 5, 15, and 30-minute time frames. These are typically going to be my focus if I'm going to go counter trend. I could sometimes make exceptions for the 1 hour, but for the most part, I'm going to be focusing in on the 5, 15, 30. Think of it this way. If you're running up an escalator, who here hasn't done that? I know we've all done it. Go ahead and admit it. You can do so in short bursts, can't you? You're not going to do it all day, but you can do it in short bursts. You can go counter the trend of the escalator, but you're going to exhaust yourself. So think of it this way. If I hop into a short-term time frame, that 5, that 15, or that 30, and I go counter trend, I could take advantage of some of the movement, but I'm not committed to longer-term organization that is contrary to the overall psychology of the market. I'm not saying that if we have an uptrend, we should never, ever go short. I'm just saying if there's an uptrend, if we are looking to go short, stick to the short-term time frames. And determining the directional bias of the daily will, in fact, help you with time frame selection. A lot of times traders ask me about this. What do I do when I have multiple setups across multiple time frames? And I always say, well, what's the directional bias? Be nice if I spelled directional right up here, wouldn't it? So what's the directional bias? Once they tell me what the directional bias is, if there is any at all, then I say, well, if at all possible, go with that trend. So the setups that are going with the direction of the market, those would ideally be my preference. It's as simple as that. So the directional bias of the dollar-yen tells me that any long is trend following, any short, may it present itself, is counter trend. So immediately I know buys can be triggered across any one of these time frames, but shorts should ideally be limited to the 30-minute chart or less. The next thing I want to do is I like to go down to a particular profile that I've created on my platform, which has the IBFX volatility indicator on it. So what I'll then do is I'll key in on whatever pair that I'm looking at. And here, where's my dollar yen? There we go. There's my dollar yen, fourth from the bottom. And I look at my dollar yen, and I know that right now the hourly rate is about 9.6 pips, and my daily rate is 63.3. This gives me an idea of what type of price movement I can currently see on the yen. But anytime I use the volatility indicator, I also like to go over to the AutoChartist Power Stats. I don't know how many of you are using AutoChartist, but it is tremendously helpful. Okay, so again, what are we trying to do here? We're trying to get to know a pair. Now, the pair in focus this month is the dollar yen. We'll go over some of the other yen pairs, but if you're trading a pair for the first time in a long time, or if you're trading a pair during a session of the day, for example, the Asian session, and you don't normally trade it, or let's say you're an Asian session trader and you're wandering into a European or UK Open and you don't know what the personality of the pair is like during those hours of the day, well, that presupposes that you understand one of the fundamental truths of Forex. All 24 hours are not created equal. So if I were to break down the movement of the dollar yen here, and I'm going to go to the movement per hour study within Power Stats, you'll notice that the 24-hour trading day, starting with 0, which is midnight, going all the way to 2300, which is 11 p.m., this is actually breaking down each individual hour and giving you an idea of what the pip movement range is like. So each one of these individual bars has a band over it. So each one of these green bars has a dark band over it. And the band represents your average, while the overall bar from high to bottom, from top to bottom, represents the probability at the tune of about 68%. So this is better than 2/3 the likelihood of the pip movement range. That doesn't mean that the dollar yen is incapable of moving more than 24 pips in an hour. And it certainly doesn't mean that the dollar yen couldn't move less. These are just a very high probability of pip movement for that hour. I also want you to notice what the most volatile hour of the day is. Now, different pairs have a different rhythm. The rhythm for the dollar yen is actually relatively sedate in terms of pip movement. It's not a very volatile pair, but it's quite consistent. It still has the highest amount of volatility during the US Open, which 8, 9, and 10 o'clock are typically the peak for that movement. And by the way, once we switch from daylight savings to daylight savings, this ends up actually being about an hour off. So this very tall candle actually is 8 a.m. Eastern Standard Time. So what I know is the most volatile time for the dollar yen typically is 8 a.m. Why? Well, when you have the dollar yen, you also have the dollar as part of this pair. And if the dollar is part of this pair, the U.S. economic reports that are released at 8:30 affect the U.S. dollar and therefore affect its relationship back to the yen. That's not to say that yen data can't affect the pair, but typically speaking, the most volatile times are between 8, 9, 10, and going into 11 a.m. Eastern. And consider who's awake. This is one of my key questions as well. Who's awake? Is Asia trading during 8 a.m. New York time? No. London is. That's the 800-pound gorilla in this market. Frankfurt and Paris are. And, of course, New York is. So when I think about why this might be moving, the largest participants in terms of the financial market that is Forex and the $3+ trillion, almost 4, that trade per day. And you can take a look at the Bank of International Settlements, the BIS.org, I believe it is, to get the different reports that indicate what type of turnover, in other words, daily participation, trading, occur in which financial centers. But the most active part of the day for most pairs is typically going to be when Paris, Frankfurt, London, and New York are all open simultaneously, which means that most pairs fall off a cliff in terms of their movement after 11:30, which is why we see the drop in the pairs after 10. So after 11:30, when Europe closes, we get that fall off in terms of pip movement. And notice that it doesn't pick up a whole heck of a lot during the Asian session. In fact, it starts to pick up a little bit at 2 and 3 a.m. when Paris and Frankfurt open, and 3 a.m. when London opens. But really, you think about the concentration of movement here, it's really between 8 and 11:30 noon Eastern Standard Time. So again, get a feel for what the pip movement range is like. So if you're trading during those hours where it's most volatile, you can have a pretty good idea you're going to move on average of about 12 pips to upwards of 20 pips per hour. Fast forward 12 hours later and juxtapose 8 a.m. to noon to 8 p.m. to midnight. Very different price behavior. Take a look. Anywhere from on average of 8, maybe 10 pips to about 14, 15 pips per hour. It drops off and stays down there. Even though it's the Asian session, it's very quiet. So these are things that I find kind of a Forex 101 approach to any pair that a lot of traders miss. They think they're going to see the kind of volatility they saw earlier in the day during the Asian session, when in fact that is not true. Oftentimes they're not ready for the increase in volatility because they're used to what they saw in the Asian session when the market moves to the U.S. session. So that's the way this graph explains the movement. Now, I can also look at movement per day, how many pips on average we move Monday, Tuesday. It changes, as you can see. Okay, but my favorite breakdown is this movement per hour. This explains so very much. Now, I can do this for any of the pairs. Let's say I want to jump and do this for let's go to the Aussie yen. So as I take a look here at the Aussie yen, okay, we're going to contrast the Aussie yen to the dollar yen, and you can see it's a very different rhythm, different price movement. By the way, this is also why when you are setting up your risk-reward ratios and placing your stop loss, this gives you a tremendous edge in understanding how much this pair could move depending upon the time of day, and allows you to place your stop losses with more accuracy because you're respecting the kind of volatility and the potential price movement range this pair could have as it applies to the time of day you're trading it. So typically speaking, just generally, when I'm trading during, say, 8 a.m. to noon, my risk tolerance has to be higher. When I'm trading, say, 8 p.m. to midnight, my risk tolerance is typically a little bit lower. But you'll notice with the Aussie yen, it doesn't really have that much of a drop-off between the average between 8 and noon than it does the average between 8 and midnight. So interestingly enough, the Aussie yen, even though the highs of the probability aren't as high during the Asian session, the averages are pretty near on pace with what we would see during the U.S. Let's go ahead and go to the Aussie yen profile. Aussie yen, the 6 charts, the profile. So I have a profile for each one of the pairs that I trade. So the Aussie yen has been a pair that I have been looking at for a swing buy for some time. And you can see my buy limits are actually parked in this market right now. And I'm going to have to edit those, but they're there for now. So first questions first. What is the directional bias of the Aussie yen? Consistent green grab candles, yes. I've got a 12 to 2 o'clock angle of the wave. And with that comes what? Bullish directional bias. So when I'm looking at this particular pair, what do I know? Who is behind the wheel? Who is steering the direction of this pair? What's the overall bias of this pair? It's bullish, right? I mean, no news flash there. So if I have a bullish Aussie yen on the daily, I know that the overall dominant psychology is bullish, and therefore any buy is trend following, any short is counter trend. Now I'd love to take advantage of a pullback and buy into the Aussie yen. So what do I need for that? I need a little bit of either yen strength and or Aussie weakness. I can look at the price movement range, and that price movement range that the Power Stats gives me focuses my ability, or focuses my attention to choose a pair that would be within what I call striking distance. In other words, right now, for me to get down to even the 20-period simple moving average on the daily, where I would most definitely consider a swing buy now, it's also overlapping. Well, I don't think this Fibonacci really is in play anymore. We made a higher high. Just delete that. So with that higher high, say goodbye to that Fibo. So if we were to move down to the 20-period simple, sitting at about 85.37, I would consider a swing buy. I would consider getting long. But I need to get down to 85.37, and we're right now at 86.37. We're exactly 100 pips from my entry. Well, how long might it take to get down to this level? We would need definitely some bearish organization of sentiment and momentum. And think about if my average pip movement is somewhere between, all 24 hours, if my average pip movement spends most of the day between 15 to 20 to 23 pips per hour, I would need a lot of concerted effort to get down 100 pips. At least 4 hours, and that would be if we're trading near the higher end of our pip movement range and that they're all consistently moving lower. That's probably pretty unlikely. I can look at the price range forecast, which is updated every 15 minutes, and get an idea of how much time it might take to get down to the level that I'd like to buy at, which again is at 85.37 or 85.37. Take a look at the forecast for the next 15 minutes, 30 minutes, 1 hour, 4 hour, and daily. Now, given enough time, if this was a foot race and we were all taking off right at the starting gun, if I gave a third of us 5 minutes to run as far as we could, I gave another third of us 1 hour to run as far as we could, and I gave the last group, the last third of us, an entire day, who would likely cover more ground? It's probably going to be more often the case that the 24-hour, the people given a day to cover more ground will cover more ground than the 1 hour, and the 1 hour will cover more ground than the 5, right? So if I am looking at a market with those same expectations, my 15-minute price range forecast is going to be squatter, narrower than the 30 a little narrower than that 1 hour, 1 hour narrower. You see where I'm going with this? So according to the current volatility and the current price movement, it's still, even if I was given 24 hours from right now, 8 p.m. Eastern Standard Time to 8 p.m. tomorrow, although tomorrow is a Friday, given 24 hours, I still wouldn't get down to 85.37 according to the current volatility of this Aussie yen. So in terms of striking distance, in terms of what I call proximity, You know, one of the things I see a lot of traders do is they set up trades, but then they have no idea how long it might take for prices to get to the level at which they'd like to get active at. This gives us insight into that. So if I do want to get long the Aussie yen, now of course, is volatility likely to increase at two very specific times tomorrow? You know, I mentioned that getting into the economic calendar is kind of outside of what today's topic is, but just let me talk about it for a moment. Tomorrow we have ECB President Draghi speaking at 5 a.m. in Budapest. After what he was able to do to the market today, sending the euro on just a spiral lower, a lot of the bears who sold the euro are going to want reconfirmation of this expectation of a potential ECB rate cut. That's what sent the euro lower. They're going to want to make sure that they're on the right side of this trade, that they interpreted Draghi's words properly by seeing some sort of reiteration tomorrow at 5 a.m. I will tell you, just pertinent to tomorrow's trading, this could be more impactful than even non-farm tomorrow. Because non-farm payroll, I think, regardless of what happens, is likely to disappoint. The forecast is already reflecting pre-disappointment. And even if it disappoints and comes in lower than the 90,000, it's likely going to have a sandy, what I call a sandy spin. Sandy meaning the storm that hit the northeast of the U.S. It's likely to be spun with this, well, it's just sandy. It's the effects of Sandy. So traders will be able to look at it, or they'll be told to look at it, or the spin will be that it's kind of an anomaly. We had an event that was completely unforeseen for this time of year, and of course, employment rate will reflect it. So I think that potentially Draghi could be a bigger market mover than non-farm or even the University of Michigan consumer sentiment. So could we see some pronounced Aussie yen movement around 5 a.m.? Sure. Could this then stretch the price movement, the price forecast, higher and or lower? Sure. In fact, we're less than 30 pips lower than this 85.64. So if for whatever reason we see a lot of yen strength coming off a very fearful market after the ECB or after non-farm payroll, this range certainly could change. That's why these are updated frequently throughout the day to reflect the current volatility. Let's go back to the charts here. So when I'm looking at the charts of the Aussie yen, I most likely won't see a swing buy on the daily till, say, next week. That is how we understand proximity. If I wanted to execute a trade on the dollar yen, let's blow this chart up a little bit. So if I want to execute a trade on the dollar yen and execute a similar type of swing buy, waiting for prices to pull back to, say, the 20-period simple, here at 82.06, and I want to look at the proximity. Is this really within striking distance? How realistic is it to expect prices to go down to the 82 major psychological level? Well, I look at the price range forecast, and I take a look at what the lows are forecasted at. And I can see here we're pretty close based on the current volatility of the market, which could be much higher tomorrow. Although today's current volatility is certainly affected by, in some ways, the extremely strong dollar we saw, extreme U.S. dollar we saw, as the euro spiraled lower. So weaker euro spawned a big-time U.S. dollar index rally. But we are, with a 24-hour forecast, in the ballpark. So that is not completely out of expectation to see possibly the dollar yen correct down to 82.03. Again, these are just calculations from historical price movement ranges, giving us an approximation of where we could see prices travel to. Doesn't mean it's going to go to both ends of the spectrum. It just means that it could travel to this level based upon what this pair is able to do in terms of the movement per hour and the current volatility. So So while it's probably not very likely that our order will get filled on the Aussie yen based upon the price range forecast, it's not out of expectation for possibly the 82 area to be tested tomorrow, or at least within the next 24 hours. Likely not, because it's on the extremes of the range, isn't it? It's not like the 82 is right there in the middle of the range. It's on the extreme. Actually, it's slightly below. So it's unlikely, but I could keep that in mind. Another aspect of getting to know a pair and focusing on a particular pair is understanding cost per trade. Now, for something like the dollar yen, your cost per trade is very narrow. You're talking about 2.3 pips per hour. In fact, there's a very cool tool at the IBFX.com website that shows you the typical spread for many of the pairs and how they look at different times of the day, not to mention the execution rate. For those of you that are trading, for the most part, 30, 60, 4-hour, and daily time frames, cost per trade is not usually going to take a large chunk of your potential reward away or increase your risk by an amount that's going to turn your risk-reward ratio upside down. However, if you are trading 5 or 15, cost per trade becomes very, very important, because the potential movement for these smaller term time frames, shorter term time frames, the expectation for movement is much narrower. So if you're looking at maybe a 10 or 15 pip potential hourly move, or a 10 or 15 pip forecast for the next 15 or 30 minutes, and you have perhaps a 4 pip cost per trade, that may actually make the trade unrealistic to take because of the spread. So if I am quote unquote day trading, looking at short-term time frames, the 5 most specifically, if I am looking at shorter term time frames, I will typically focus on those time frames that have the narrowest spread, because cost per trade is a huge factor when it comes to trade selection for day trades. And again, for me, day trading means short term, typically a 5-minute time frame. I can't really talk about the yen without talking about December 16. December 16 is when the elections are going to be held in Japan, and the expectation continues to be that Abe will win the election. He has all but promised, guaranteed, that he will begin very aggressive monetary policy easing. I believe the word was unlimited that has come from that. So yes, in terms of longer term yen expectations, I don't have any expectations for the yen to become very strong. And by the way, despite today's move in the dollar, I don't have a lot of bullish expectation for the greenback either. So my advice for those of you that are asking me this Noda versus Abe, last time I checked the polls, Noda was 3rd in the polls. There's 3 parties that are vying for that spot, and Abe is leading. Noda's 3rd. The expectations are that Noda is not going to win the election, despite the fact that he is now executing 2 of potentially 3 emergency stimulus plans, spending plans. He released one to the tune of about 420 billion yen. He released a second one to the tune of 880 billion yen. So this man has now spent over, 1.2 trillion yen. And there is a third package that is expected. I don't think this is going to make a difference for his re-election bid. So if Abe wins, that's what the market is actually expecting. That's where the weakness in the yen has been coming from, and we likely might see more depending upon how much Abe ramps up this monetary policy easing talk. If, for whatever miracle of miracles, Noda wins, the yen will, from current levels, likely strengthen significantly, since it is Abe leading the polls, and the monetary policy easing plan that he has promised the Japanese people. It's likely that if Noda were to win, the yen's going to strengthen. If Abe wins, the yen will remain weak. That is the expectation. Okay? And it's really a matter of perception as to what they think each one of these gentlemen will do. And furthermore, what they're both promising. Now, I'm not saying Noda doesn't embrace monetary policy easing, but Abe really is pushing that agenda very hard, and because he is leading, that's why we see so much yen weakness. Although it has paused because we had so much sharp yen weakness that the market now is basically going to wait. We're looking at December 16, which is Monday morning in Japan, and we're talking about basically we have next week to trade, and then boom, we'll have the election on the 17th here. So in terms of those fundamental factors, I typically will look at the yen, Aussie yen, and the euro yen more specifically when it comes to understanding risk. When I'm looking at the risk environment as reflected by the U.S. equities and the U.S. dollar index. I would typically focus on dollar yen and euro yen. I'm sorry, Aussie yen and euro yen, not the dollar yen. So with that in mind, it would be easy to say or ask, why isn't the yen strengthening in this time leading up into the fiscal cliff where there's so much uncertainty? Had Noda not dissolved lower parliament, and had that not triggered an early election, and had that early election not shown that he was going to lose, so many series of events occurred to really make the yen detach in many ways from being the risk barometer currency that it typically is. So this has thrown the carry trade in many ways on its head because it's not really connected to U.S., not as directly connected as before to the U.S. risk environment as it has been. It's really very much a weak currency based upon internal, in this case, a political election in Japan. So up until the 16th, I don't expect the yen to behave on fundamentals outside Japan in any significant way. Yes, if there is dramatic fear, either triggered by Europe or the U.S., yes, the yen is likely to strengthen. But when traders refocus on this potential Abe victory, I think the yen will have really no choice but to weaken. And when you look at the movement here, lower in the euro yen, is this yen strength or is this euro weakness? I think we all know this is very much driven by the euro weakness. So a big part of understanding the movement for any one of these pairs, not just the dollar yen, not just any of these yen pairs that we've been discussing tonight, a big part of it is understanding who the driver is. You have two individual entities here. You have two currencies. I see far too often traders look at them as a single unit, when in fact you really want to at some point dissect them, individualize them, and understand what's affecting the dollar and what's affecting the yen, or what's affecting the euro and what's affecting the yen. And you'll find many times one of the currencies is the primary driver, and there's a completely different reason for the movement. So, for example, when I see the dollar yen, the dollar was very strong today. It's no surprise that it's moved up higher. When you look at the euro yen, the euro was very weak today, extremely weak, down over 100 pips. No wonder we see movement there. This has nothing to do with dollar weakness. This has nothing to do with yen weakness, this movement higher on the dollar yen, nor does it have anything to do, when you look at the euro yen movement, this has nothing to do with yen strength. Okay? So understand the driver of the pair. And oftentimes, maybe not as dramatically as it was today, but oftentimes there will be an individual story in one of the currencies that's really creating most, if not, in this case, all of the movement. Okay? Any questions? Any other questions? All right. Well, that is the session for tonight. Again, getting to know the dollar yen, but we talked a little bit about the Aussie yen, a little bit about the euro yen. One of the pairs that I've been having a lot of fun trading has been even the loonie yen, Canadian dollar, Japanese yen. Again, you'll notice that most of these pairs that I'm focusing in on do have trends. They do have a directional bias on the daily that offers me a tremendous amount of clarity, and therefore I believe an edge in understanding whether traders are more likely to buy into pullbacks or whether they'll be willing to rally through resistance. It gives you a tremendous edge in the overall clarity of the market's movement. So look for that directional bias. Before you get into a pair, depending upon what time of day it is, look at the price range by hour of day. Let this help you guide some of your stop loss placement. Let this help you guide some of your profit target placement and understand the potential for volatility. You can look for volatility on not only the power stats, but you can also look for understanding volatility by way also of the volatility indicator on the IBFX platform. So I like to use a combination of both, and as you can see here, I have a separate profile that has this indicator active as a graph, so I have easy access to it. Understand the rhythm of the day. Perhaps we'll have a session for fundamentals at a later time. Again, I wanted to focus on 2 out of the 3 aspects that move a market, the price movement range, a little bit about technicals, and separately about fundamentals at some point here in the future. But again, the fundamentals for the yen until now and the 16th of this month will most definitely be the election coming up and Abe leading in the polls. Okay, a couple questions have popped up. If we don't go over the fiscal cliff December 31st, do I see the dollar strength in the pair? I actually see, again, aside from today, the only reason the dollar got a burst of strength is because of the euro weakness. So Raghee effectively flushed the toilet on the euro today by the tune of, what, 100 and, I forgot how many pips I saw at the most that was selling off. So don't perceive the euro-US dollar strength as being driven by the dollar. It was, euro-US dollar weakness being driven by the strong dollar. It was actually being driven by the weaker euro. That was the driver. Yes, we have movement in both pairs, but the movement in the euro created a scenario in the US dollar. So, longer term outlook, I think the dollar really is looking at lower lows, because once we get past the fiscal cliff, if there's a lot of optimism in the equities markets, that will pressure the dollar. We still have a Fed that's ready to ease if need be. So that's pressure. The FOMC's pressure, bearish pressure on the dollar. The risk appetite, risk on outlook for early 2013 is pressure on the dollar. So I actually see more dollar weakness. But what happened today in the euro, that dramatic move, is what happens when traders don't have any kind of warning or have not discounted to any degree a piece of fundamental data that suddenly hits the market. In this case, this idea that the ECB has been discussing rate cuts. That wasn't really something that was in the ether for the euro. So you see this sharp discounting that occurred when traders came face to face with it. But I have an overall bearish take on the dollar, fundamentally. Directionally, I did too. One day does not make an uptrend, or one day really doesn't break the downtrend, but I do see likely between now and the end of the year a lot of chop for the dollar, and then possibly lower lows after the first of the year. Okay, so if for any of you that have questions about power stats or the volatility indicator, please contact customer service. I really can't do tech support from here. That's definitely not my specialty. Please contact customer service. They'll walk you through how to get power stats. They'll walk you through how to set that up. They'll walk you through this volatility indicator as well. Okay? So that's my best advice there. All right, so thank you again very much for your time. I really appreciate it. Thank you so much for your questions. Really thoughtful questions. Again, I appreciate it, and I will see you the next time we have one of our live sessions, okay? Again, feel free to head over to the YouTube channel as well as the Daily Forex Trading Edge, where there's plenty of content. I have new updates over at the Daily Forex Trading Edge daily, so we can keep the conversation going there. Have a wonderful day. Tomorrow's going to be a heck of a way to end the week, that's for sure. I actually won't see you all until the end of until next month. So everyone have a wonderful holiday. Have a happy New Year, and I'll see you in 2013.